pound's up, the pound's down. The dollar's soaring, the dollar's plunging. But why? What moves currency markets? Why do exchange rates fluctuate, often dramatically? The answer is supply and demand. But what drives supply and demand? Number one, an expectation of national economic weakness. Think of something like a war or a natural disaster or some other event that's going to have a radical change on economic circumstances in a country. A good example would be the Brexit vote, which led to expectations that the UK economy was going to be permanently smaller than previously thought. So what's going on? Well, bad economic news implies less economic activity, which means less foreign investment, which means less foreign demand for a country's currency. The result, the exchange rate goes down. Number two, expectations of national economic strength. Now this works the other way. Think of an unexpectedly good GDP figure, or perhaps a new oil and gas discovery. Sometimes it's in response to a political decision. Think of the dollar's reaction to Donald Trump's election victory in 2016, which came after he'd promised a large tax cut and a significant infrastructure spending splurge, all things expected, at least in the short term, to raise US GDP. Stronger economic activity means higher interest rates to head off inflation. Higher interest rates means better returns for foreign investors. The result, the currency goes up. But it's important to remember that the value of one currency is always valued relative to another currency. So for instance, sterling is valued relative to the dollar, to the euro, to the yen, to the rand, to the Mongolian togrog, you name it. So if the value of another currency rises, that means the value of yours can go down, even if nothing substantive has changed about the economic outlook for your own country. So when the dollar rises against the pound, that can be because the US outlook is looking better, not because anything has changed about the UK's prospects. And a final word of caution. Do not make the mistake of assuming that every currency move is the result of a careful assessment by traders and financial investors of underlying economic conditions. In the short term, and even possibly the long term, there is a very large dose of knee-jerk sentiment, herding, and occasionally blind panic involved.